At midnight, traders were still staring at their screens. 5 stocks broke the tape so violently that nobody on Wall Street could explain all 5 before the closing bell. A $2.2 billion acquisition. A melanoma drug that just collapsed in Phase 3. A billionaire who quietly built a $2 billion stake in February. And one chip stock that lost hundreds of billions in market value over something it cannot control. By the end of this video, every name is on the table. Let's set the stage. The Dow closed down 1.1% at 49,526. The S&P 500 dropped 1.2% to 7,408. The Nasdaq slid 1.5% to 26,225. The U.S. 10-year Treasury yield ripped above 4.60%, the highest reading in a full year. That is not a quiet tape. That is a tape that is screaming something. The screaming has a name, and the name is Iran. Oil prices spiked over the weekend after the U.S. president warned he was running out of patience with Tehran. Reports surfaced that Beijing had agreed the Strait of Hormuz must reopen. Energy traders panicked. Tech traders dumped. And that is the soil 5 massive single stock stories grew in today. So buckle in, because story number 1 starts with a ticker most people have never heard of. Stock 1. LiveRamp, ticker RAMP. The data collaboration company that nobody talks about at dinner parties just lit up trading floors. Shares exploded 27% in early trading. 27%. In a market this red. The reason? Advertising giant Publicis Group agreed to buy the entire company in an all-cash deal worth $2.2 billion. $38.50 per share. That's a 29.8% premium over Friday's close. And here's the part Wall Street is whispering about. Publicis didn't buy LiveRamp for its current ad tech business. They bought it for what comes next. Quote, agentic business transformation. In plain English, AI agents that need clean, connected customer data to actually do anything useful. LiveRamp CEO Scott Howe stays on, reporting directly to Publicis CEO Arthur Sadoun. The deal is expected to close by the end of the year. And it just put every other ad tech name on the takeover board. Stock 2. Brady Corporation, ticker BRC. A boring industrial label maker from Milwaukee that just ripped 17% in one session. 17. The trigger was a fiscal third quarter earnings bomb. Revenue came in at $435 million, blowing past the $410 million analysts expected. Adjusted earnings per share hit $1.50, up 23% year over year. Then management raised full-year guidance. And then the real story leaked out. The real story is data centers. Brady makes the labels and identification tags that go inside every hyperscale facility being built for artificial intelligence. Every cable, every server rack, every cooling pipe needs precise labeling, or the entire data center risks going dark. Operating cash flow jumped almost 31%. Total sales grew 14%. Brady just quietly became an AI infrastructure stock. And nobody in the financial media saw it coming until today's print. Stock 3. Microsoft, ticker MSFT. The biggest name on this list moved 3.1% today, and on a multi-trillion-dollar market cap, that is real money. The catalyst? Bill Ackman. The famed hedge fund manager who runs Pershing Square just disclosed a brand new stake worth roughly $2.09 billion. 5.65 million shares. Built quietly starting in February while the broader market panicked about AI capex spending. Ackman's words landed like a hammer. He called Microsoft's 365 product suite and Azure Cloud, quote, 2 of the most valuable franchises in enterprise technology. He described the valuation as, quote, highly compelling. And here's the kicker. While he was loading up on Microsoft, Pershing Square slashed its Alphabet position from over 6 million shares down to about 312,000. That is not a small reallocation. That is a vote against Google in the AI race. Stock 4. Regeneron Pharmaceuticals, ticker REGN. And this one hurt. Shares collapsed 11.1% in a single session, wiping nearly $77 off the price to close at $621. The reason? Regeneron's experimental melanoma drug fianlimab, paired with Libtayo, failed its phase 3 trial. It could not beat Merck's Keytruda on progression-free survival. In oncology, that is not a setback. That is a knockout punch. The analyst reaction was instant and brutal. Citi downgraded the stock from buy to neutral and slashed its price target from $900 all the way down to $700. Bernstein cut to $861. RBC Capital trimmed to $707, flagging this trial failure as part of a broader pattern of pipeline disappointments. For a company whose entire narrative rested on dethroning Keytruda, this is not a one-day story. This is a thesis breaker. Stock 5. Nvidia, ticker NVDA. The most important chip stock on earth just fell 4.4% and dragged the entire Nasdaq down with it. 4.4% on a roughly $3 trillion company. Run that math. Hundreds of billions of dollars of market value vaporized in hours. So what triggered it? It wasn't earnings. It wasn't guidance. It was geopolitics colliding with a stock that everyone agrees is priced for absolute perfection. The warning about Tehran. The Strait of Hormuz threat. Oil spiking. Suddenly a prolonged Iran conflict looks less like a tail risk and more like a base case. And here is why that matters for Nvidia. A spike in energy costs lifts inflation. Higher inflation lifts long bond yields. Yields above 4.60% crush the multiple investors are willing to pay for the priciest growth names. Nvidia, sitting at the top of the AI mountain, gets hit first and hardest. So zoom out. What do these 5 stocks actually tell us? LiveRamp screams that AI agents need data, and data brokers are now strategic assets. Brady screams that the picks and shovels of AI infrastructure are mispriced. Microsoft screams that smart money is doubling down on enterprise AI. Regeneron screams that even billion-dollar drug pipelines can break in a single press release. And Nvidia screams that the AI trade is no longer immune to geopolitics. There is one more thread tying it all together, and it is the 10-year Treasury yield touching its highest level in a year. When yields rise that fast, every long-duration asset gets repriced. Growth stocks, biotech, anything trading on far-off cash flows. Today's tape was the bond market punishing those names while value, defense, and industrials caught a bid. That rotation is not a one-day event. It is the new regime. Look at who survived. Brady, a 100-year-old industrial. Microsoft, the most cash-flow-rich tech company alive. LiveRamp, getting bailed out by a strategic acquirer. Who got crushed? A biotech that bet everything on one trial, and a chip company priced for a future that geopolitics suddenly threatens. The pattern is screaming at you. Pristine balance sheets, real cash flows, and strategic value win. Story stocks and single point of failure pipelines lose. Pershing Square is not alone. Recent 13F filings this quarter show a massive rotation. Out of pure growth and into quality compounders. Out of speculative biotech and into established cash machines. Today's price action just confirmed what the institutional flows have been hinting at for weeks. The smart money sees what is coming, and they are positioning early. The retail crowd is usually 2 months late to this exact same trade. And let's address what almost nobody on financial TV is saying. The Dow lost 537 points, but it closed at 49,526. That is still near record highs. We are not in a crash. We are in a violent rotation. The averages mask carnage underneath the surface. Some stocks like Brady scream higher. Others like Regeneron get destroyed. The index level numbers lie about how brutal stock picking has become. So what do you do with all this? First, watch the 10-year yield. If it stays above 4.60, expect more pressure on the priciest tech names. Second, watch oil. Every dollar oil rises is another nail in the soft landing narrative. Third, watch insider transactions and 13F filings. When billionaire investors move, the market eventually moves with them. And fourth, do not confuse a quiet index print with a quiet tape. 5 stocks. 1 day. A $2.2 billion acquisition, a 17% industrial rip, a hedge fund whale loading up, a melanoma trial collapsing, and Nvidia paying the price for geopolitics it cannot control. This is what a market regime change actually looks like in real time. Not a single dramatic crash, but a series of individual earthquakes that, stacked together, reveal a brand new playing field. Investors who adapt fast win. Everyone else gets stuck holding yesterday's story. So here is my question for you. Of these 5 stocks, which one would you be buying tomorrow morning at the open, and which one would you not touch with somebody else's portfolio? LiveRamp, Brady, Microsoft, Regeneron, or Nvidia? Drop your pick in the comments and tell me why. Because the most interesting trade is almost never the one everybody agrees on. If this video brought you value, hit like, subscribe, and share it with a friend. Thanks for watching, see you in the next one.